Most people who follow my channel know me for turnaround investing, finding beaten down small and mid cap companies before the market does. But here's the second part of how I manage money that I haven't talked about much yet. I also swing trade large cap stocks. Before you ask, no, these two aren't contradictory. They're actually designed to work together, and I'll explain exactly why in this video. But first, I want to show you today's is the framework that I use when I'm swing trading. Not the specific stocks, not the live positions. The actual thinking process. How I decide when to step in, how I manage the trades when I walk away. Because here's the thing, most retail traders lose money swing trading, not because they pick wrong stocks. They actually lose money because they have no framework. They're just guessing whether to buy or sell. So if you want to understand how a systematic approach to swing trading actually looks like, let's get into it. So let me walk you through how I actually think about a swing trade before I put any capital to work. The first thing I want to say is my process is not purely technical and it's not purely fundamental. It's a deliberate combination of both. Roughly speaking, the technical side drives about 60% to 80% of my decisions, and the fundamental side drives 20 to 40%. And I want to explain why this ratio exists because it's not arbitrary. The technical side tells me when to enter, price action, structure, momentum. These things tell me whether the market is ready to move in the direction I'm thinking. A fundamental story means nothing if the price isn't set to move. I've seen fantastic businesses sit flat for months. Timing matters in a swing trade. But I never trade a pure technical setup on a company. I know nothing. If I know nothing about the business, I'm not taking the trade. This is where the fundamental layer comes in. Before I take positions, I want to know, is the business that fundamentally capable of moving up? Is there a reason beyond just a chart? An upcoming catalyst, sectoral tailwinds, a valuation that makes risk adjusted reward to be asymmetric, something that gives the trade a backbone beyond just lines on on a screen. When both of those line up, this chart is telling me the timing is right and the fundamental gives me conviction. That's when I act. Now, one thing I do differently from a lot of swing traders you see online is I don't wait for Nifty to confirm before I enter. I trade regardless of the broader index or directions. And I know that raises the eyebrow. The conventional advice is don't fight the market, only trade with the trend. I understand that logic, but in my view, that at any point in the market, there are stocks setting up well. The index is an average. Individual stocks don't move in lockstep with it. If my technical and fundamental conviction are met on a specific name, I am not going to sit on my hands because Nifty had a bad week. I will do what I will do is adjust my conviction level and my sizing based on the broader market conditions, which I will cover in my next section. In terms in term of holding period, the majority of my swing trades, roughly 85%, close within a year, most of them significantly sooner. I'm not holding for a multi-year compounding in this book. That's where my turnaround portfolio is. Here I'm looking for a specific move, capturing it and moving on, clean and disciplined. By the way, the chart you're seeing right now is of Reliance, and next to it there's Eris. As you can see, Reliance is the consistent compounder and has grown and has nearly 3x since 2017, and Eris has only doubled. This shows that swing trading in large cap stocks can give you alpha, and you should rather buy in small caps, because that you should rather invest in turnarounds in small caps, because that's gonna generate more risk adjusted returns. Let's talk about risk management, because this is where most retail traders quietly destroy themselves and most finance content creators avoid getting specific about it. First, position sizing. Every single swing trade I put on is between 3 to 5% of my total capital. No exceptions. That ceiling exists for a reason. If I'm wrong on a trade, and I will be wrong, that's the part of this business. Damage to my overall portfolio is contained. I am never in a situation where one bad trade materially sets back everything that I'm building. That 3 to 5% range isn't random either. Higher conviction setups get closer to 5. Lower convictions or situations where I want exposure but I'm less certain about on timing sit closer to 3. The range gives me flexibility without giving me enough rope to hang myself. Now stops. Here's where I'll say something that some of you will push back on, and I want to explain my thinking carefully. I don't use traditional stop losses on my swing trades. And before you close this video, hear me out. The reason most people use stop losses is to protect themselves from holding deteriorating businesses. The stock keeps falling, the thesis is broken, but they can't bring themselves to sell. So they need a hard rule that forces them out. I solve the problem at the entry, not after. The only swing trade I only swing trade large cap businesses that I genuinely understand fundamentally. In these are not speculative names. These companies are these companies have real earnings, real balance sheets, real competitive positions. If the price moves against me temporarily, I'm not panicking because I know what I own. What I'm what I'm watching is consistently is whether the fundamental thesis is intact. The moment the business changes, not the price, the business, that's when I exit. That's my stop loss. It's not just the numbers, it's the on the screen. Now, is this approach for everyone? No. This only works if your fundamental analysis is sound. If you're swing trading stocks, if you're swing trading stocks you don't understand, please use a hard stop. The approach I'm describing requires you to genuinely know the business you're in. The combination of capped position sizing and fundamental discipline is how I keep risk manageable across Mother Swing book. No single trade can break me, and I'm never holding something I don't believe in. Now, I would like to go through a live example of a trade I took years ago. to give you an idea of how I swing trade. So here I'm on Infosys chart. Infosys is one of the best IT service companies in India. So I bought this around here. So there was a support here. I bought this stock around the support because first of all this is a massive support, and and the business is down 30% from its lifetime high. And the if you see the earnings back then, um if you see the earnings then, they were on their lifetime high. They were lifetime high, and the sales were lifetime high too. But the stock was 30% below. So I thought this was a good opportunity to buy this company, and I did buy it. I bought it around here. Now, after a couple of days of me buying the stock, the results came and the stock dropped 10%. Now, most people here would have sold and panicked, and they lost money. But I held on to it because I knew the business and I knew how it worked, and one quarter can't change the business entirely. And I held on to it till it reached the lifetime high, at which I sold. This this one single trade made me 42% in just a year and a half. This is what I'm talking about. In the next section, I want to tie everything together and explain how this swing trading book sits alongside my long-term turnaround portfolio, and why I keep that combination is actually more robust than running just one strategy. I want to take a step back from the mechanics. Now I want to explain something that I think is genuinely important, and I haven't seen many people talk about it honestly. I run two strategies simultaneously: s- swing trading, large cap stocks on one side, and turnaround, long term turnaround investing on the other. And the question I get, or question people are thinking, even if they don't ask it, is, aren't those two things contradictory? A long term investor who also swing trades doesn't mean you're committed to both either. I'd argue the opposite. Let me explain about the how I think about this. The turnaround is my core portfolio. These positions are hold held on for years in some cases. I'm buying businesses that are mispriced by the market. Companies have going through difficult periods, and I believe will come out on the other side fundamentally stronger. The returns on s- these when the thesis plays out are significant, but they require patience. Sometimes a lot of it. You can go on for months where nothing moves. That's the nature of the strategy. Swing trading, the swing trading book exists alongside that. It serves a completely different purpose. It actively engages with the market every single day. It generates shorter time horizon, and it funds the patience that the turnaround demands. When you have a part of your capital working at shorter cycles, you're not sitting anxiously watching your long term position, ho- hoping something moves. The pressure is off. You can let your turnarounds breathe, which is what they need exactly. These two strategies don't compete. They complement each other psychologically and financially. The- there's also a skill overlap. I think that is underappreciated. Swing trading large cap stocks keeps my technical analysis skills stronger, and I'm consistently studying price action, market structures, how stock behaves around catalyst, the pattern recognition. Don't stay in with the swing book. It informs how I time entries and exits in my turnarounds. When I'm building a position in a small cap turnaround, I'm not just asking whether the business is undervalued. I'm asking whether the chart is all set for entry. Because it's going to be a bad idea for you to enter here. The chart would keep, the price would keep falling. But a smarter decision would be to wait for a consolidation and then enter somewhere here. That would be a way smarter decision. That combination, deep fundamental work plus technical discipline, is what I think gives me an edge that purely fundamental or purely technical investors don't have. And the bigger picture that um, I'll be transparent about. The way I manage money today is a preparation for how I intend to manage money at a larger scale in the future. Running two strategies isn't a hobby, it's building a track record, the discipline, and the process that a serious investment operation requires. Every trade I make, every position I manage, every mistake I learn from, it all compounds into something larger than an individual return. The honest answer to why I do both, this is that's the honest answer to why I do both and why this channel exists. Not no just not just to share videos, but to show the work in real time. Before I wrap up, I want to be straightforward with you about something. I won't be sharing live positions from my swing trading book on this channel. Not specific stocks, not entry points, not timing. I wa- and I want to explain why. Because I don't think you deserve a real answer. Because I don't think you deserve a vague answer. I think you deserve a real one. The first reason is integrity. If I tell you I'm buying something and you go buy it too, I've just influenced the price of my own trade. Even if at a small scale, that's a conflict of interest I'm not willing to have. Your capital and my capital should never be pulling in the same direction because of something I said on camera. The second reason is that edge in trading is fragile. The moment a specific setup becomes widely known, it stops working. I've spent a significant amount of time developing how I think about these trades. Sharing the live mechanics in real time would erode that for me, and ironically for you too, because a crowded trade is a dangerous trade. What I will share consistently is post trade breakdowns. After a position is closed, I'll walk you through the whole thing, what I saw, why I entered, how I managed it, and what the outcome was. Win or loss, you'll see both. That's where the real learning is, anyway. Not in following someone's life positions, because in under but in understanding the process behind them well enough to develop your own. That's what I'm here to build with you. I'm the If that's the kind of investing content you're looking for, subscribe because there's more coming up. And if you have any questions about what I covered today, drop them in the comment. I read everything. Thank you. Have a great day.